Welcome to the New York Outlook for Thursday, the 7th of March 2024. Starting off with the economic calendar, we have two red folder news events for the New York session. The first being unemployment claims at 30 minutes into the New York session, and then at about 2 hours into the New York session, we have a Fed Chair Powell testimony. And because of that, I'm not interested in trading based on the New York session. Instead, I'll manage any open London positions accordingly. I took two positions in London. One is currently open and the other is a loss. Although it looks like it's quite likely that the second position will also be a loss. But we can understand what has happened and then go from there. So starting off with the daily, essentially on the daily, what we can see is we have four consecutive bullish candles, and thus it's quite fair to assume that today will be a bearish day. Although it doesn't look like it right now, the news events are can actually result in things turning around quite significantly. So we'll have to see how that plays out. From a 4-week perspective, nothing much has changed from the New York outlook. We still have reason to trade both directions, although the pullback phase last point of supply has achieved its objective of reaching the substructure high right here, and perhaps I can mark it out. So for its substructure right there. So from a pullback phase perspective, we had a reaction to the last point of supply. We had all the IRL to the left, and since all the IRL has been taken and substructure high has been also weak, there's no reason to believe or to trade counter trend anymore, and it makes a lot of sense that price comes downwards, at least until it either breaks this pullback, well, at least until it reaches deeper into this pullback phase last point of supply. However, all of that remains in the air and in balance based on, these news releases. In terms of tomorrow, there is also a bunch of USD news releases. And tomorrow is actually NFP, so quite an interesting day for tomorrow planned. But in terms of today, because of the daily bias of expecting a bearish daily candle, we don't, we couldn't really trade any counter trend plays, and that's the most obvious play was actually to trade to the downside, especially given that from a market structure perspective, the pro trend move is to trade to the downside. And if we in this pro trend extreme, then it only makes sense that unless market structure is going to change, this is the last period that is likely to hold to actually push us to the downside. Although we've had quite a time with this corrective leg, so it's been a challenge, no doubt, but we navigate it based on a defined rule set and stick to it accordingly. So moving on to the 5 minute, let's essentially unpack what had happened here. So we had, like I said in the London session, there was two options for trading. Either we get into this limit order based on the idea that the previous day created a new leg, and because of the daily bias, we can trade to from the previous day high to the extreme, and then try and find our way into a 1 to 3 position by the 50%, sorry, by the 70% level of the daily range. March's daily range is about 60 pips at the moment. So having said that, 70% of that is around 42, 43 pips, and for that reason we positioned ourselves here. The other alternative was that Frankfurt high of the day will be validated by London, and as you can see, that's precisely what happened. We had the Frankfurt Open creating a high of the day. The Frankfurt leg was validated right here. And then since then, we had London wick below the Frankfurt range, essentially validating the Frankfurt range. We then came in and came down because we have current day liquidity. I wasn't, we have current day Asia liquidity to target, and there's a 60% chance that both sides of the Asia range will be liquidated on the same day. And then in terms of previous days, there's also this previous Asia liquidity right here, which I can mark up over here. So we've got this right here being day one since creation that's unliquidated. Do we have additional Asia liquidity? We do have this one, but that's quite old. It's day 0, 1, 2, 3. So between the current day and the previous day, there's a lot of confluence to believe that, this will actually play out. In terms of liquidity grabs, you can see the previous high of the day's liquidity was grabbed, and in an ideal scenario now we'll have sufficient fuel to push us to the downside, but all that remains to be seen, and It's probable that we may be wrong and we're facing a bit of a losing streak, and that's perfectly fine. I accept the risk when I put these trade positions on. So we'll essentially monitor that. So what is the New York outlook? Well, essentially, like I said, because Powell is testifying 2 hours into the New York session, if I take any New York trades, it's quite difficult to manage them and ensure that I get to a reasonable state before his testimony. And in an ideal scenario, I'd like to exit before his testimony. Um, Obviously, since I won't be trading any New York-based trades, I won't be giving an outlook of what to expect. Essentially, I'll give some insight into how I'm going to manage this trade, provided the unemployment claims is positive for the USD supporting shorts of GU. I'll leave this trade open. If it is negative, supporting longs for GBPUSD, I'll try and get out break even plus commission in an ideal scenario. And obviously, it's very possible that we may just take a loss. So whatever that the case may be, we'll manage it accordingly. But I think the key time frame to monitor will be 3:30 p.m. If we survive the 3:30 p.m., then I'll essentially evaluate where I am at the time when Powell testifies, and if it makes sense, I'll consider leaving the trade open because we're quite well positioned to target this forward swing ERL. And what might very well happen is that tomorrow's NFP will give us the fuel to actually come all the way down and take out the swing ERL. Although that's a lot of pips to move. So if we move, let's say 100 pips today and 100 tomorrow, then it's very possible that we might achieve that objective. Um, However, having said that, we're still just barely in this position. Luckily for my trade plan, adding a bit of a wide spread of about 2 to 2.5 pips. We're still in this trade, so that's 11.5 pip stop loss. But yeah, we'll I guess we'll manage it accordingly. Other than that, that's pretty much my New York outlook, and we'll chat again for the end of day review.